All right, there we go. All right. So, welcome everybody. Hope everyone's had a good weekend. It is Sunday, the 26th. Going into this week, first thing I want to talk about is news. So, I do not think that we have a lot of news this week, actually. We're going to be actually going into a week that is not going to be news heavy. We've had a lot of news the last couple weeks. So, we have final GDP and unemployment claims Thursday. Nothing on Friday, really. Core PCE index. Tuesday, nothing really. Consumer confidence. We don't have really insane amount of news this week, but still some stuff that we need to watch out for. How are we doing, Anthony? All right, guys. So first thing I want to talk about is my strategy and in the way that I can bend the rules a little bit. And there's certain times where I have an area of confidence where I allow myself to take a trade, even if the specific parameters that I need aren't met. Right? Like, let's say there's not a clear break of structure, there's not a clear sweep of liquidity, there's not a clear fair value gap, there's not a full retracement, right? There's not a discount retracement. I'm sure a lot of you guys have noticed, especially when it comes to retracements, the way I trade, and people who have been in the live sessions for a little bit of time now, you might be able to recognize that I will take a fair value gap, or my entry might not be in a discounted range, right? I might not wait for a full pullback to a 50% retracement to enter in. And most of the time when I do enter before that, we don't end up going to a discount retracement. We just end up going straight to wherever liquidity is resting, because I have the confidence and I know that we're most likely not going to retrace fully. But there's certain circumstances where you are able to recognize those things, right? So I want to see going into Friday. I do want to look at Friday. We did take a trade on Friday, and this is a perfect example of not every, actually, this is a pretty spot on trade. I'm not gonna lie. This was an A+ setup that we took on Friday. This was a beautiful, beautiful trade. Looking at, so let's go over this trade one more time real quick for people who haven't seen it. So we took a long trade on ES Friday morning. We actually entered into a pre-market and wrote it into the open. So the first thing I noticed going into today on Friday was, let me actually replay the session. I'm gonna go to a 30-minute time frame here. So replaying the session here, this is what it looked like going into the day. And what I was pretty confident with is I was expecting us to now have a move back to the upside, right? Notice that internal liquidity has been taken, right? This low has been taken. We're starting to chop, right? There's not a lot of selling pressure. Keep in mind, we also have a 1 hour fair value gap that we're starting to bounce off of. And this is the candle that really starts to show that we might have a reversal or some kind of break of structure now to head back to the upside, right? So once I see this candle start to form, I start to have more of a long bias, right? This is now our break of structure, right? Notice on the 15-minute, we don't really have any displacement, right? No highs being broken. And then we get this big push here, break of structure there. So this looks really, really nice. Liquidity is taken. And the biggest thing on this trade that gave me a lot of conviction for longs was how big the SMT was. So notice on ES here, we keep forming lower lows. Lower low here, we break that low, lower low, break that low, lower low. But on NQ, it seems that we're still making a higher low. So look at this. We ended up pushing down, chopping all day on NQ in the morning. And then right when we broke below that low here, we ended up just flying, right? Because liquidity now was taken. Notice we had a small little wick push below this level, and then instantly started getting buying pressure, right? In the morning, it was just pure chop on NQ, right? I remember trading this, buy side was like up on these wicks, and we just couldn't seem to get that hit. And then we ended up pushing down, finally taking out sell side liquidity, and then having that big push up in that run to take out buy side liquidity up here. So there's a big SMT, right? So we have liquidity swept on ES, break of structure to the upside on a bigger time frame. But keep in mind, this is a break of structure on a 15-minute, right? So we normally wait for a break of structure on, like a 5 minute or a 1 minute, whatever we're trading. So we have to take into accountability that the specific chart that we're looking at is giving us a long bias for the day, right? Because it's a 15-minute chart. We're looking at a bigger time frame. So it's giving me a long bias for the day. So I want to use this information to try to find a long trade that I can trade off my strategy, right? Because I'm a scalper. I like trading, a couple 1 to 20 minutes is what I like to trade, right? No, nothing more than that really. And knowing my edge, I wouldn't really trade a 15-minute with the same risk parameters that I would what I normally trade, which is, a 1 minute time frame, 5 minute time frame, 2 minute time frame, whatever it is. So looking back at this, I'm going to create one more 15-minute candle here because we ended up creating this fair value gap. So let me actually go down to, let me draw this in first. Draw this in here. Let me go down to a 1 minute time frame here first. So going back, looking back at this trade, I want to look for a long entry, right? But if I was to enter on this right here, right? Because keep in mind, this is a 15-minute fair value gap, right? 15-minute fair value gap. So there's also a 5-minute fair value gap here. So I think I took this trade and ended up getting stopped out, actually. I took this trade in the morning right here, targeting here, and I set my stop at the low. Now, why is this bad? Why is this it's not necessarily bad, but why is this not necessarily the right play? And the reason this is not necessarily the right play is because since there's a bigger fair value gap here, we can end up going through this and still end up holding this on a bigger time frame. And that's exactly what happens. We end up going right through this fair value gap here. Break through, right? We go right through that. I ended up getting stopped out. And at that point, it's like, oh, this looks like, this is invalid, right? It's invalid, right? Exactly. We had no breathing room on our stop loss because we didn't take into account we were trading off of a 15-minute fair value gap, right? Now, the 5-minute, it adds a little bit of thesis, but the whole reason we're taking this trade in the first place is because of the 15-minute. The 15-minute structure is what we're trading off of. So we have to take that into accountability, right? We have to take that into account and know how to change our strategy, how to change our risk, right? Because normally I set my stops very tight. I can't do that here. I ended up getting stopped out. So how do you then use this? So the best way to do this is if we're trading off of a 15-minute, 30-minute, whatever it is, fair value gap, look for confirmation that we are holding that level on a smaller time frame. So 1 minute, right? We push through. It looks like we broke through, but on a bigger time frame, we're actually still holding this level, right? If we look at the 15-minute, we dipped back into this. And remember what I like to say, wicks do the damage and the candles show the narrative. We still held this level here. So once I saw us getting bought back up, I was like, okay, 15-minute is still holding this level. We're most likely going to end up going to buy side. So now once I see confirmation of us holding a 15-minute fair value gap, right? I like to use multiple things. If I can see a 15-minute fair value gap, 30-minute, 5-minute, whatever it is. Once I get confirmation that we're holding a bigger area, keep in mind, we're also bouncing off this 1 minute. Then I like to look for an entry, right? So now I'm looking for a 1 minute fair value gap to be created after bouncing off of a higher time frame fair value gap, right? Because that's going to add even more conviction, even more confidence. That is what I'm looking for. So that's exactly what happens. I wait for a fair value gap, but notice this, right? In this live trade, I was looking for an entry in this fair value gap, right? Because this is the one I saw, right? This is the one I saw here. Now, I ended up not getting this entry. And if I waited for this to come in here, I would have missed out on this whole play. Because what happens is we end up creating another candle and we end up creating a 1 minute fair value gap here. That is all I need. If I see that we are creating another fair value gap, I do not need to see us come down into this fair value gap for us to take a long entry, because the reason why, but again, this is for this specific circumstance. Other times, I'm going to wait very patiently for me to get the entry that I want. But the reason why I entered this on this fair value gap is because I knew we didn't need to come back to retrace here. We could, right? We could have entered, we could have came back here and then bounced. but I don't need to get that entry because we're overlapped with a 15-minute. And I was very, very confident in this trade, right? This is exactly what I wanted to see. And I expected to see strong buying pressure come in after this trade. So I got everything that I wanted, right? I have everything I wanted. Looking at a 1 minute on NQ2, at this specific time on NQ, keep in mind, NQ took out this low. So NQ took sell side internally. Actually, never mind. Sorry, we have not taken sell side yet. So this was up here. So this was buy side liquidity. And I don't think we formed any sort of divergence here. I don't think we did. Oh, I didn't even see that. Look at these equal highs here as well, right? All of these equal highs acting as buy side liquidity that is going to get taken out, right? Notice how when we take it out, we automatically sell off to sell side, right? Beautiful explanation here. Right when all these highs are getting taken, automatically sells off to take out sell side liquidity once buy side liquidity is taken. What exactly do you mean by internal liquidity? Okay, awesome question, right? So when I say internal liquidity, in the market, when we're looking at areas of liquidity, we like to categorize them as internal or external. External meaning on a bigger time frame, internal meaning on a smaller time frame, right? So if I'm looking at a 1 minute chart or a 5 minute chart, what I like to look at, like if I'm looking at here, right? If I was to mark out my areas of liquidity on this time frame, like a 5 minute, right? I'd be like, okay, internal sell side liquidity is right here, right? This is a key level we need to pay attention to. Internal sell side liquidity, right? We just took out internal buy side on this. And then also we have buy side up here, but that's more external, right? So now if I was going to go to, let's say, a 30-minute time frame, right? Now, this would be external sell side liquidity right here because we're on such a bigger time frame. This sell side liquidity down here does not mean shit if we're looking at this time frame, right? This little level right here doesn't really mean anything, right? Because if we're looking at this kind of time frame, we could end up just going right through that and then dumping down. But it's important to us at the time if we're trading that sort of time frame, right? Like I would still consider this internal liquidity right here, right? Internal liquidity taken because our external liquidity is our actual big lows down to here that we need to pay attention to. But since we're in this range right here, notice like we're in this big range from this high to here. We're in the middle of this, right? We're in the medium. So this is internal liquidity, right? I hope that helps answer your question. So looking back at the 5 minute, got a beautiful push. Again, this was a no-brainer trade, like I said in the live, and wrote it up to the top of the weekly opening gap, scaled my last contract there. And then the rest, I ended up getting stopped at break even there. Yeah. So I want to take a second to talk about something I've been noticing, and especially I want to talk about the correct way to position yourself, especially if you are going to be taking trades with me in the live sessions. And I want to talk about this because I care about my members and I care about my members succeeding and not failing in wrong ways, right? So one of the things I've started to realize and see in the live sessions is whenever we take some kind of loss, right? And then we end up taking some kind of win, I am always going to be green on that. Most of the time, if I follow my risk parameters, I follow my rules, I follow my correct position sizing, I will always come out on top, right? Look at the last week. I didn't have a single red day last week. Well, I didn't trade the first 2 days of the market, but we've been doing very, very well. But we've also had some losses, right? But we're still very green. So I also see members that are not green. And the reason is because they're not positioning themselves accordingly to how we trade as a team, right? Now, my whole goal with this group is for you guys to be self-sufficient enough for you guys to one day not need me and you can cancel your subscription and I want you to go trade on your own. That is my ultimate goal, for you guys to be self-sufficient. But until then, I want you to understand and learn how important risk management is and how important it is to position yourself accordingly. Now, the reason I'm able to take such a perfect example is on Friday. I took this loss in the morning, Let's draw this out. I entered on this 5 minute fair value gap. I'm going to say it was somewhere here. I probably didn't get the best fill, so it was probably here. And my stop was at these lows right here, right? So this is a 2.23 RR trade, right? Okay. So I lost. I don't know exactly how much I was down on this. I want to say maybe I was down like maybe a $400, $300, $400 loss, I think, on this first trade. So I set a very tight stop and I don't let it affect me whatsoever, right? It's like, okay, I realized after I got stopped out that I failed to position myself accordingly. So instead of being afraid to get back in, I automatically realized that I made a mistake. I said, this trade looks great. I'm very, very confident with this trade, but I'm not going to break my rules, even if I know this trade is a very high probable setup, right? Now, because a lot of people are going to be like, Justin, if you got stopped out, why did you stop out right here? If you knew this was a confident A+ setup, why didn't you just hold it? Would have bounced up. That is not what we do. Okay. Even if you have the confidence with the trade to get a little bit of drawdown, do not let yourself provide more drawdown than you need and that will go against your position sizing and go against the risk that you put on the table. Never. Because exactly, humans are never 100% correct. This trade could have flushed straight through this and gone to sell side liquidity. It absolutely could have. The market does whatever the fuck it wants to. And you will soon find that out if you do not position yourself accordingly and practice risk management every single day you come into the market. There can be a single day where you decide to not come into the market. You break your fucking rules because you're having a shitty day, whatever it is. You don't have the discipline to, you put in, you're like, yeah, I want to take on this trade. There's no setup in front of you. There's literally no setup, but you're like, I think it's going to go up here. That is how you make mistakes. That is how you blow up an account, because you don't have the discipline to sit in front of the market for a couple hours and not take a single trade. That is what you need to build up to. Having the discipline to sit in front of the charts all morning and not take a single trade because you know that there was no good setups. You should have the confidence in yourself to be like, you know what? I am happy that I did not take a single trade today because there was no good market. The market was so shit today. Because if you did, you force something because you need to see some kind of green on your P&L to make you think that you're actually improving. That is where you end up getting fucked. Because a lot of new traders think of it the wrong way. They think if they're making money, they're doing something right. That is not it at all, because you can be making money and you could be doing something absolutely fucking wrong. And you could be losing money and you could be doing something absolutely correct. But the difference is when you're losing money, but doing something correct, you're building good habits. Those good habits are going to stick with you longer than that lost money. You're going to make that money back in the long run because you're building good habits every single fucking day you come into the market, because you know how you need to be behaving. You know how you need to be acting. So over time, when you start taking those losses, but you can come out of it saying, I am happy because you know what? I followed my rules. I followed my bias. I knew exactly what I was doing. I had proper position sizing. It just didn't work out for me. That is how your losses should look. Your losses should not, let me say this. When I first started trading, and I'm sure a lot of you can relate to this because I've blown up multiple accounts when I first started trading. There would be days where I'd wake up, I would not follow my rules. I'd lose a bunch of money. And the second that I click the sell button and I accept the loss, I sit there in a moment of realization. It's like I've just went through the 7 stages of fucking grief in like 30 seconds, right? And I'm like, Justin, what the fuck did you just do? Right? Because at the time, you're not thinking about the fucking negative. You're thinking about, dude, if this trade goes in my favor, I'm making like at least fucking 2 bands off this trade. Like, you're not thinking about potentially losing, because as an emotional creature that you are, you do not want to accept the risk that you are putting on the table. You do not want to accept the risk you're putting on the table. And as humans, and as we are as traders, the ego takes over. You do not want to be wrong. You cannot accept, your ego cannot have another wrong trade, because you're going to be fucked mentally. You're going to start to think that I can't do this. I'm a fucking terrible trader. I suck so bad. Like I can't do this. You cannot afford to take another loss mentally. Not even like financially. Not even, I'm not talking financially, mentally, your ego cannot stand another loss because you hate the fact that you're being wrong. As traders, you need to understand, every person in here listening, you need to understand that you do not need to be right to make money. You do not need to be right to make money, and you can be wrong and still make money. Okay? So this is where you need to understand that you need to push your ego to the side. You need to push your ego to the side and realize that being right or wrong does not matter whatsoever. It doesn't matter to the person next to you. It doesn't matter to the person. It doesn't matter to me. The only thing that it should matter is yourself. And yourself shouldn't care if you're right or wrong. What you should care is if you are wrong, did you do everything you knew you were supposed to do, right? Did you go into that trade following your rules, following your edge? You waited for price action. You got the correct entry. And you followed your stop loss. You got stopped out. Is that the loss? That is the loss you should be taking every single time you lose. And I have built up over years of trading that is the only loss I will be acceptable. I've built up a level of discipline where the only losses you will see me take is I will get stopped out. That is it. You will never see me let something run through my stop loss. And you should never do the same. You should follow behind me and do the exact same thing. So, sorry, I kind of went off right there, but back to this original trade where it's like, Justin, why don't you, let your stop go a little bit looser? Okay, so let's say I did, right? Let's say I did. Let's say I moved my stop to this here, right? Let's say I moved my stop to the bottom of this here, right? Now, let's say this trade ended up going against me and it didn't bounce here. What I like to think about is, guys, we trade futures for a reason, right? With futures, you can always get back in, right? If you get stopped and it goes back in your favor and you start seeing more confirmation that, the trade actually will work out in your favor, you can always get back in. Always. You can always get back into it. Now, what you always can't do is get out of a position when you're down fucking way more than you should be, right? You can't make that money back. All you're doing is hoping, praying to the fucking gods that it bounces back to your entry price for then you to take it off a break even and waste all that emotion and all that time for fucking nothing, right? So if I move this stop to here, I am now losing $1,000, right? I got stopped out here. I'm losing, $400. Now I'm losing, $1,000, $1,200. So by the time it does go in my favor, I'm stopped out. And then if I actually take this win, I'm now break even on the day. If that, right? So that is the reason why risk reward is so important. Always follow your fucking stops. Right? Now, there are circumstances where you might take a trade where you know that your stop may need to be a little bit looser, right? So now, looking back at this, if I was to take this trade and enter here, knowing that I are like, all right, Justin, we're in a 15-minute fair value gap. I know that, we can maybe go through this. I want to give it a little bit more room. What do I do? All right. What I do is I enter in with a quarter or half of my position sizing. So that way, if I do get stopped out, I'm taking a normal loss than what I would normally be if I'm in a full position in a normal trade with a normal stop. So now, if this comes back down and I don't get stopped wherever my stop is, and I start seeing more confirmation in another fair value gap, this would be my entry to then add my full position onto this, right? I now add my full position once I get that extra confirmation. I enter in off a 15-minute fair value upright in case, it does bounce up. I'm still making profit. But if it does go back, I'm positioning myself to take a little bit more drawdown because I'm positioning myself accordingly. I'm cutting back on my position sizing, knowing that I have more room to run with now, right? I'm only moving my stop loss to have extra room because I know that my position is cut in half. So if I do take a loss, it's going to be significantly smaller than what it would be if I was in a full position and I let my stop go super far. Now, I want to talk about the people. I don't kind of figure out how I want to phrase this real quick. So let's just say this. I'm going to bring up a circumstance, and I'm sure a lot of you can relate to this, right? Let's say you come into the market, you make, the first, let's say market opens in 30 minutes into the morning, you're up, let's say $500, right? You're up $500 in the morning, right? You decide to keep trading, you think the market looks good, lots of good opportunities, next thing you know, you're taking another trade and then you're at $200, right? So you just gave back $300 profit, right? So at that specific point in time, right? Everybody think about this right now and think about if this has happened to you. 30 minutes into the market, you're up $500. 20 minutes after that, you're now up $200, meaning you just gave back $300 profit on a loss, right? What is your next thought after that happens? Most of the time, what is your next thought if you were not an experienced trader? You're like, oh, fuck. I was up 500. I want to end the day at 500. I want to end the day at 500. A lot of new, unexperienced traders are going to have that urge to jump right back in to make that money that they just lost back, right? So next thing you know, they're now down $300 on the market. Let's say they're down 300. So they just lost another 500. They were up 200, up 500, lost 300 to 200. Now they're down on the day. They're down 300. You just went from being up 500 to down 300 in the matter of an hour because you feel the need to put on a trade and have the satisfaction psychologically of doing something correct. You don't think that you're progressing as a trader unless you are actually putting on trades with money and risking capital. I don't understand why traders think that. Now, I used to think that. I can't say I don't understand because I do understand. It's a new traders are coming to the market. The biggest focus is, of course, going to be making money, right? So now let's say they enter another trade and then they're back at break even. So you just wasted all of that emotional capacity going through a whole fucking, emotional journey of you being up 500 and then giving it back and then being like, oh, fuck, like I need, I want to end the day at 500. That's my goal. Like I was at it, I'm going to get back. And then next thing you know, you're taking another trade, you're down. Next thing you know, you're taking another trade. And then there's going to be sometimes where motherfucker, you are not going to be able to take a single winning trade. And you're just going to keep running down that account balance until it's worthless. All right. And trust me, it's happened to me before. Because there's times where you do not know when to step away. You do not know when to just stop because you do not have the discipline to realize that trading, you think of it as like a fucking game. It is easy to click a button. That is what trading is. You are clicking buttons. That is it. That is the only physical action in trading is clicking a fucking button. And that's super fucking easy. So you do not know what you're doing at the time until it's already done. And then you're like, what the fuck did I just do? I just broke every single rule in my rule book because I was in a zone. I was just in a fucking bubble in my head and I didn't realize what I was doing whatsoever. So I decided to, put on more size, try to make money. And next thing you know, my account's gone. Guys, you know what you need to be doing. Every single person, whoever is in this Zoom call that is listening to me talking right now, you know what you need to be doing. It's that simple. You know what you need to be doing. You know what's right and what's wrong. So fucking do it. Do it. You know what you need to be doing and what you not need to be doing. Now, I know that it's easier said than done. And I know it takes lots of time. It takes a lot of discipline and a lot of patience to be able to get to that point. It took me around 2.5 years for me to get to a level of discipline where every single day that I come into the market, I follow my rules and I don't break my rules. But it took me, 5 blown accounts of the exact same mistakes over and over again for me to realize, all right, this shit is not going to work. I've realized that after this many times of accounts being blown up, that there will never be a time where you will get lucky. Stop thinking you're trying to get fucking lucky. It's not the goddamn lottery. Go to the fucking roulette table if you're trying to make money that way, right? You have to actually trade the correct way, and you know how that needs to be done. Now, you might not understand that now, right? You might not understand, you're still trying to figure out your edge. You're still trying to master, your entries, your actual trades itself. But nonetheless, the rules that need to be followed. And the rules that need to be followed are the things that are going to keep you alive. And those are the things that are going to be the things that will actually keep you in this game for years to come, that you can actually make a career off of. Your strategy, your edge, that's, you're in it. I can make fucking $50,000 just full porting a thing. But the hard part in trading is keeping it. It's easy to make money. The hard part is keeping it. And the only thing that's going to help you keep it is if you're following proper risk management and proper position sizing. So, talking about this in a sense of outside of the market as well. I always say this. If you are not disciplined outside of the market, you cannot expect to be disciplined inside the market. If you find yourself struggling to stay patient in the morning, you find yourself putting on trades that, that you don't really have a really good, there's no setup in front of you, but you're still taking a trade, right? And then after you take a loss, you're like, why did I take that? Or why did I overtrade? It comes down to number one, it comes down to multiple things. Number one, you don't have a defined edge. You don't know what you're looking for. That's number one. You don't know what you're looking for. You don't know what actually works and what doesn't work. You're just putting money on the table to try to, figure out if it's going to work or not. It's and at the start, you kind of do need to do that, but don't risk an insane amount of money. Trade like one micro contract. If that, go paper trade. But I recommend trading micros because you want to be able to experience actually trading real money and being able to control that emotional sense, right? So number one, you don't know what you're looking for. Number two, you're not following any sort of rule set for yourself. You don't even have a rule set for yourself. You're coming to the market, doing something new every single day, new position size. You're like, yeah, I want to risk some fucking more today. I like this, let me put an extra fucking couple contracts in here. You don't have a consistent size. You don't have consistent risk reward. You don't have a consistent setup. That is the biggest thing in trading, guys. Now I want to put something in the perspective for you. Do you know what it takes in trading for you to be financially free? All it takes for you to make money and change your fucking life in this market, all you need is to find something that repeats every single day. Something that almost repeats every single day. But you need to find something that repeats. That's it. If you can find something that repeats consistently, and repeats in the same way consistently, once you can recognize that and be able to see that live, you now have an edge. That is your edge. Whatever that is, whatever that thing that you find consistently over and over again, it continues to work. That is your edge. Now you build a system off of that. Now, for example, let me talk about multiple. Like I know traders that just train off liquidity sweeps. They'll look for a sweep liquidity, and then they've noticed over time that in the 15 minutes or first 15 to 30 minutes of the market, liquidity is swept and then it dumps, or then it's a change of structure. It's a reversal, right? So have something that you have seen repeat itself over and over and over again, right? So now build a system around it. what are your requirements for taking a trade like that? Let's say number one, you want to see that liquidity being swept. All right. And that's your first one, because that's your main, the main reason why you're entering. Let's say second, it has to be in the first, 15 minutes of the market. So now you actually start to back test, go back and look at the times where this has actually happened. This is why journaling is such a big part of trading. If you are not journaling every single fucking trade you take, then you're not learning and you're not actually accepting what's going on in front of you. If you take a trade and you're like, it was a loss, you skim over, you're like, oh, I shouldn't have done that. All right, next. You're not soaking it in, right? Now, like it's kind of funny to say, but like a lot of teachers in high school would be like, if you're not writing it down, it's not going to stick with you. And it's so fucking true. If you are not writing this shit down or typing it out or screenshotting it or saving it, then you're not going to learn it. It's not going to stick with you. You're not going to realize the mistakes you're making, and you're going to make and repeat the exact same mistakes over and over and over again. So journaling is so important, because when you start to build up a catalog of all the trades that you take and all the mistakes you make and all of the good trades you make, you then go back in this journal that you have built and you get to see the good trades you take and the things that have actually led up to that. You look at this, you're like, okay, this is an A+ setup. I had this, and this. That's why it worked for me, right? So the next time you see that similar setup, right? Because it's a consistent, repeating thing. The next time you see that, you have even more confidence now, because you're like, wait, I took this trade before. I have more conviction now. You have less stress now. You have less anxiety because you have conviction. You actually have confidence in your edge. Guys, you will not be successful in trading if you do not have confidence. Because I know a lot of people that trade like I do, but they don't have the confidence to enter right here, right? They don't have the confidence to actually hit the fucking button to put themselves in that trade. What's going to build that confidence is seeing the same things repeat over and over and over again. And I really do hope that the people who have been in the live sessions for now, or the people who have been here for over 2 months, you guys know what my trades look like, because they look very, very, very similar. All of my trades look very, very similar, because I know it repeats and I've created a system based off of it. That is how you will find success in the market. Being able to find something that repeats every single day, taking advantage of it, building a system, put risk management onto that, and keep journaling it and back testing it every single day. That is where screen time comes into play. That is why trading takes a long time for you to become successful. You have to build up an arsenal inside your brain of thousands of experiences, thousands of hours of you seeing different types of things, right? Because there's times where I'd be like, okay, you become so, it's like a language. Price action is a language. You understand the market in a way over time where you're able to read it, and understand probability, right? Because that's what trading is. It's a probability game. Your edge is basically you saying, I have a better probability of this hitting this before this hitting this. That is your edge, pretty much. That's all it is, right? The whole reason I trade how I do is all from probability. All it is if I buy here, I have a better chance of it hitting buy side liquidity before it hits my stop loss, right? That's all it is. So journaling is very, 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 very important, because it builds up recognition of price action. It builds up certain trades. You want to know what a good trade looks like and what a bad trade looks like, because if you don't, then you're blind. You don't know what you're doing. You need to know what an A+ setup looks like and what a not A+ setup looks like, or what an A- or B+ setup looks like, right? You need to know those things, so when you see them live, you already know it's like, oh, this is a no fucking brainer play right here, right? Now, that does not mean up your size. If you have more confidence on your trade, that does not give you the right to then up your size because you think it's going to go for you. And the reason is because there will still be times where A+ setups will go against you and you will get stopped out. And it might be because you just didn't position yourself accordingly. just like this, for literally just like this. Now, I am very, very confident in this trade that we're going to hit buy side and we're going to most likely run to weekly opening gap today. But this specific trade, I didn't set my position accordingly. I set my stop too tight when I first entered this in the morning, right? So even if this is a high quality trade and I know it's most likely going to hit buy stop, my setup, I didn't position myself accordingly. So I still ended up taking a loss. So there's so many different things that go into trading. And the only thing that's going to help you recognize that and understand the system behind it is time. It's going to be hours putting into the day. Now, trust me, you do not need to be trading every single second of every single day for you to be improving. Block that out of your head. Take it out. Delete it. Whatever it is. Whoever thinks that you need to be trading to improve, stop, because it's not true. What you need to be focusing on is focusing on taking good trades. Now, if you don't know what a good trade looks like right now, that's fine. Well, you want to start figuring out what a good trade looks like. And that's why I'm here. That's why I do what I do, is because I want to give people and you guys the opportunity to use me as a resource. I'm here to show you what my specific strategy looks like, what my specific system looks like. Now, you do not need to trade how I trade. Everybody's different. Everybody has a different personality. I want you guys to build your own system. Now, if my system happens to fit with how you trade, that is perfect. That's fine. If you find yourself, it's the same personality, that's great. But my goal is for you guys to use me as a resource and you guys to figure out a system based off of your personality, your emotion, and how you want to trade. Because every trader is different. Copying somebody else that doesn't fit your personality is going to be very difficult on you. I know traders that cannot scalp like I do. I am very, very fast-paced trader. Most people cannot have the calmness that I do. A lot of people cannot handle trading that much amount of capital in such a short amount of time with the amount of volatility I trade. You have to be very, very calm. Now, I've gotten to a point where I will still get stressed sometimes. I will still get anxious, but right when I do, that's where recognizing your emotion comes into play. And that's why it's so important. As traders, you need to be able to recognize when you start to feel a certain way, right? If you're in, the middle of the trading day and you realize that you're in a position, let's say you enter a position that you're not necessarily, that fond of. Actually, I don't even want to say that. Let's just say you're in a position, but you're afraid you're to lose. That is the biggest thing. You have not accepted the risk that you're putting on for the trade. And that's the biggest thing with trading. You should not be taking a trade if you do not accept the risk first, because there's always going to be risk with trading. And if you do not accept it, that adds an extra layer of stress because you now have a loss that you do not want to lose, but you're still putting it on the table. So why the fuck are you doing that? That's why you have to have a consistent position sizing. A position sizing where you are willing to take whatever loss that is. Whatever, if you get stopped out, it should not affect you because losing is a part of the game. You know that your system is rewarding in a longevity ideology, knowing that if you lose, 1, 2, 3 times, you're still going to be profitable. Now, if you come into the market and not have that acceptance, you do not accept the risk you put on the table, you're over leveraging. You then add an extra layer of emotion onto that as well, because you're starting to think that you're going to lose a large amount of capital that you do not want to lose, right? So then you start making dumb decisions right when, the trade goes against you and you're down. Let's say you're normally down like $100, but let's say you're down like $300 now. You're like, oh, fuck. You automatically take it off because you're scared to lose more money because you are over leveraged. You're not used to seeing your P&L fluctuate in such a large amount of money that you start adding an extra layer of emotion and anxiety and stress onto your position and yourself as a person, and you make irrational decisions. That is how emotion fucks you because you're over leveraging yourself. So what my biggest recommendation to control anxiety and stress is have a consistent position sizing. Accept the risk you put on the table with every single trade that you take. Because if you don't, and you don't accept that risk, and you're over leveraged, trust me, you'll fucking know when you're over leveraged. You know it, but you do not want to take accountability for making stupid decisions until it's already fucking gone. You're like, if I lose here, then I'll fix the problem. Like, what? Like, you know you're doing something wrong right now. Why don't you just fucking fix it? You've lost how many times in the past? Why are you doing the same fucking thing again? And you think you're going to get a different outcome from it? You're a fucking idiot. Why? Do not let yourself have to blow up for you to then realize you're doing something wrong. You don't need to. Have the discipline and be a better person to take accountability for yourself. Trading is a one-on-one job. It is not you versus me. It is not you versus anybody else in this Discord. It is not you versus the market. It is you versus yourself. And if you do not take accountability for the actions that you do, you will never improve as a trader. You will never, ever, ever improve. Because if something bad happens, you brush it to the side because your ego is too big for you to admit you're wrong and make a mistake, right? You need to admit that. That's why if I ever make a mistake, you guys are the first ones to fucking hear about it. Because I want you to understand that sometimes I will make mistakes. I'm human. But I take accountability for it because I want to grow. Even if I'm a profitable trader, you never stop growing. And if you're not taking accountability for yourself, you're never going to improve. No one else is going to do it for you. It's you versus yourself. You are the only person that's going to make this work. Trading is a solo job. That's what makes it so great, but that's what makes it so hard. You work for yourself, but if you're not able to kick your own ass for it, you're not going to work because you don't have fucking, Coach Frank on the sidelines that's, yelling at you to get your ass up, right? You got to do that to yourself. And you have to have the mental capacity and the capability for you to be able to get hit multiple times, fall on your ass multiple times, and get back up every single time and jump back in. Learn from your mistakes. Use it to your advantage. Oh, okay. Let me, sorry, I kind of just, I've been kind of going off, but let me read the chat real quick. Sorry, guys. This is how everything is in life. Trading reveals your habits in real life, good or bad ones. Absolutely. Abso-fucking-lutely. 100%. And I do want to say this, as a person, you will start to realize how your life starts to trade outside of trading. Your life starts to change outside of trading, emotionally, psychologically. I noticed that I completely 180'd. I completely changed as a person. Who I was before I started trading versus who I was after 3-4 years of trading. I was a completely different fucking person. I handle situations differently. I'm more calm. I don't deal with people's bullshit. I recognize situations where I need to be and where I don't need to be. I have the discipline to allow myself to do certain things and the discipline to push certain things away. You become so much more calm as a person. So yes, absolutely. Everything in life, trading reveals your good habits and your bad ones. And that's a good thing. Take advantage of that. Take advantage of that. And this is even, this doesn't even have to do with trading, but as a person, if you want to be successful with whatever you do, you have to have a growth mindset, meaning every single day, every single situation, there's always some sort of learning opportunity from it. You're always trying to improve. That is the goal. You need to have a mindset of constantly wanting to improve as a person. It's funny because the one key account I blew up on Webull, if I closed the correct time, I would have been up like 2K on that, just knowing when to close. Well, it's also exactly, it's following your rules as too. Like you should never let a position, if you are up, guys, one thing I like to say too, if you're up enough that you want to screenshot it, sell it. If you are up enough on your position where you want to screenshot it, sell the fucking position. You should never let a good big winner turn red. That is why scaling is so important. If I was to take this trade right here, guys, like I did, and if I was to, set my price target up here and set my stop at break even, if I caught this whole move, if I didn't scale here, and it came back, I would have made zero money on this, and I would have gotten stopped out on this, so I would have been still in a loss. Scale out along the way. Do not let your winners turn red. The next Shiloh. What's your train of thought / risk parameters once you're up that $500? Good question. So for me personally, with how the position size I trade, normally I don't start selling my position until I'm up around 1,000. It's like around 1,000 to 1,200. What I've noticed. Now it depends on the trade but most of the time the risk that I put on, most of the time, my targets is when I get to around like $1,000 to $1,500 profit, around there. So once I'm up there, I take off around half my position, right? Most of the time, my first price target, I take off half. Like right here, I took half. My second price target was the top of this weekly opening gap. And I took another quarter off, and then my last quarter got stopped at break even. So when I'm up on a trade, right? The first thing that you need to do is recognize where we are. Recognize the actual trade itself. Do not focus on the money. Recognize the trade first. If you're up money, push that to the side. Block it out of your emotion right now, right? Because the money is as a byproduct of the trade. The only reason you have that money right now is because you're actually in the market in a specific moving, market that's, you're in a trade. That is what is making you money. So recognize the actual first thing. Money's the byproduct, right? So let's say I'm up $500 on a trade, right? Now, a beginner trader, there's multiple things that struggle with, right? There's going to be traders that struggle with letting their winners run. They could be up $500, but it might only be like a tick move. Let's say I'm up right here, right? I enter in right here and I decide to take I get off right here, I get out right here. So even though I'm up $500, this trade now goes from, a 1 to 3, then 1 to 4.5 to then, a 1 to 1.7, which is not bad at all. This is just an example. But that's one type of trader, which is going to be the ones that's going to be up 500. And the first thing that they want to do is sell their position, right? Which is not bad, but not good. And one thing I want to say too is the famous quote in trading where it's just like, you'll never go broke taking profits. Fuck that. That is bullshit. You can absolutely go broke taking profits, because if you take profits at $50 fucking dollars, but let your stop loss go minus $200, fuck yeah, you're going to go broke, because you're taking profits too early, not letting your goddamn runners go, which is actually going to make you money. You're not letting your winners run to an area where your risk to reward is actually something that's profitable. So that's number one. Fuck that quote. Don't listen to that shit. Whoever created that can go fuck themselves. So that's one type of trader. One's going to take too early. Now there's another type of trader who, let's say he's up 500 and it's past his price target. Let's say I'm up $500 right here. My price target's been hit, but I don't want it to go against me, right? I still want more. I think we still have room. Even if the chart looks good, even if you are confident it is going to go up, scale your contracts, because you do not know what the market is going to do next. The market does whatever the fuck it wants, and it might still go up, right? If you're looking at a 15-minute, you're like, yeah, this looks fucking good. This looks like we're going to go up. But you got to realize, number one, you're trading on a 1-minute time frame. Number two, your risk and your position size is not set for a 15-minute trade. You're taking a 1-minute time frame trade right now, meaning if you're trading on a 15-minute, your stop needs to be this low. You're not letting yourself risk that much size, right? So you need to think of it as a whole different trade now, because you need to focus on what position you're in right now. So there's traders that are going to struggle with taking their profit. Always take off your position. Now, let's say there's traders that, let's say I'm up 500 here and I never sold and it comes back to break even. Now what? And I've been in this situation. I know you guys have too, where you're up a lot and then you're back to break even. Now, what do? Most of the time, you're going to hold it. Most of the time, you're going to hold it. Now, this is where mindset becomes so important. Mindset becomes so important. For me, I will not let a winning trade, especially if I'm up $1,000, I will not let that trade go back red. I will move my stop to break even, and I will take a trade from up $1,000 to I'll take it off a break even. Now, that's a bad trade because if I'm up $1,000, that means I should be at least secured $500 profit, at least, or at least $2,000 or $250, right? I should have at least secured some type of money. Now, the traders that let that price go back to break even and let the trade continue, now you might get lucky, you might get a bounce and then it goes back to that. But there's going to be a time where you do not let it go back. And that price that comes back to break even, it ends up going lower and you end up turning in $1,000 up on the trade to negative $500 loss. Now, the reason why mindset is so important is because the reason I take off the trade at break even is because once this, guys, you got to realize this is a fucking 8 minutes of time, 8 minutes, 8 fucking minutes. That is nothing. Think about it, your whole fucking career, your whole life, 8 minutes. How many more opportunity do you think there's going to be after those 8 more minutes are done? How many fucking opportunities are there going to be? Infinite. Literally infinite. Now, you can debate this, right? If there is infinite or not, but I truly do believe that there's an infinite amount of opportunities every single fucking day in the market. Every single day, there's always an infinite amount of opportunity. So why does this affect you? Now, it's good for you to get upset at yourself. If you let $1,000 trade go back break even and you stop out of break even, you should take a second and say, why I shouldn't have let that happen. I should have got my price tag. Next time I am going to take off 50%. And you journal that, you log it in your journal, and boom, that's how you do it. You learn your mistake and you're being hard on yourself, but not too hard. Because the best thing you want to realize too is notice the good and the bad. The good is you took it off at break even and you pushed it to the side. It's gone now. You journaled it, learn, gone. It's in the past, right? I do not take this specific trade into my next trade knowing what just happened before. That is the worst thing a trader can do. You should not be going into a trade thinking about your last trade, because every single opportunity is unique. If you go into a trade with the ideology or the mindset or the anything, your emotions are going to get skewed because you're starting to think about something in the past and a mistake you made in the past. So when you're thinking psychologically about a mistake and trying to fix it, you're over, stimulating yourself on something that is not even affecting you right now. You should be focused on the specific trade you're taking right this fucking second. So that is where mindset comes into it when talking about what we're talking about right now, right? Is for me as a trader, if I was in this, I'm up 1,000, let's say I made a mistake. Normally this would not happen. I would not let myself do this. But let's say I made a mistake on the day. I ended up coming back break even. I say, you know what? I'm going to take it off a break even because if I don't want to let this go, it could go against me. I made a mistake and that's it. Next trade, boom, done. And then I continue to look at the price section, take this off, and I'm like, all right, let's see what happens next. That's it. It's gone. It's done. And then I go back at the end of the day, I journal it, I screenshot it. But at that specific moment, you need to be able to control your emotion in a sense where anything that just happened is automatically cut from your fucking head. You cannot go into a trade thinking about what just happened before that, because that's how you're going to end up making stupid decisions. Because if I just took a loss, I go into my next trade thinking about that loss, and I psychologically am being like, okay, I want to make this back. Now, you might not be saying that, but emotionally, psychologically, that's exactly what you're doing. You still have that thought or that trade in the back of your head where it's like, oh, fuck, I cannot believe I made that mistake in the morning. And then you're searching. It's like you're not waiting patiently for the market to come to you. You are avidly looking for a position to be putting on, like acting like it's life or death. You need to be taking a trade in the next 20 minutes or else you're going to fucking blow up because there's a bomb strapped to you. That's how you're behaving, because you have the thought in the back of your head that you just took that loss and you want to make it back because your ego can't handle another loss. Your ego can't handle another fucking red day. You need to make it shit back. How much did you lose before becoming profitable? I think yeah, around 15K. Protect capital at all costs. Journal your thoughts too. What exactly? Journal your thoughts. That is big. Now, I wish I could show you guys my journal, but for some reason, my OneNote it won't work for some reason. So I used to journal on OneNote. For some reason, it's on my MacBook. I'll screenshot it in the future. But around a year ago, I used to journal on OneNote. And I had around, I want to say 4 or 5 months of journals, of like journal entries of every single day, you know, my P&L for the day, what trades I took, you know, what I did right, what I did wrong. But the biggest thing about journaling as well is, again, like Maury said, it's big. You need to journal how you were thinking and how you were feeling at the time. And I know it doesn't sound big, but there's little things that affect it. Like I have I'm sure you guys know there's a big guy in the community named Shinobi Signals. And he's a good friend of mine who I met a couple years ago when I first started trading. And he used to tell me that he would trade better on sunny days than he would on rainy days. He said he would trade bad on rainy days. And I was like, what the fuck? Like, how does that even happen? Like, how do you tend to lose money on rainy days, but tend to make money on sunny days? Like, how is that even possible? And he said to me, because I tell myself that I make more money on sunny days than I do rainy days. I tell myself. I look at my journal and I see that it happens. So then I now know it does. What does you think that happens? What do you think that does to somebody that is now trading? How stupid does that sound? I trade better on sunny days than I do rainy days. How do you think he goes into trading when he sees fucking rain outside? He goes in with less confidence now because he's told himself something over time that might be true, might not be true. But that is how powerful your mind and your emotion is with trading, and how important it is to control those things. Because if you tell yourself something, you're going to think that is reality. That is the truth. Whatever you think, that's what you're going to believe. So when you're journaling, you want to talk about your actual thoughts. For example, let's say I was in a trade. Let's say I took this long setup, 8:30, like let's say I took this long setup 20 minutes after the open. I wasn't too confident on this play. Right when I entered it, I started to see price action go against me, and I started feeling a little bit angsty. I had the urge to take it off, but I decided to follow my rules, and I didn't take the stop off. Then, the next couple minutes, it ended up, going in my favor. I started to, get a little bit happy, and I ended up selling it. So then you go back, you're like, okay, so you typed your thesis, whatever it was, you typed it, a shortcoming. So now you go back and you say, okay, so what do I do right? What do I do? Number one, I recognized my emotion, which was good. I took a decent trade, not the best, but what I do bad, I ended up taking it off, right when I just had a little bit of profit, which is not something I need to be doing. I need to be letting it, my runners go more, right? So that's not something that I did the best at that time. So journal your thoughts, every little thing that you're kind of feeling. Another thing I recommend doing too is download something like OBS that can record your desktop and your audio and talk to yourself when you're trading. Just like how I do with you guys, how I talk to you guys when I'm trading, exactly what I want to see. What do I not want to see? What am I looking for an entry? What am I looking for with NQ and ES? Because I can trade in complete silence, and all of that shit is calculating inside my head, right? All of that shit is calculating inside your head. But when you speak it out into existence, you're actually talking to yourself, right? Because a lot of the times I recommend not just sitting there and trading in silence, but talking to yourself. Talk out loud. Put it into the fucking air. Put it out there into the universe, right? Because then that helps you understand what you believe even more. That's why I love teaching, because I get I get the most out of it. I feel like I get the most out of it because I get to reinforce my belief, right? I get to reinforce my belief where I've gained even more confidence with my strategy because because I get to share it with you guys and see it repeat over and over again. And I talk it out to you guys. I'm in a position where I get to teach and mentor you guys, which I'm so thankful for. And I love to do it. And I get so much out of it because I get to hear your guys' questions that makes me rethink certain things. I get to see things from different perspectives and I love it. You don't ever add more cons even on A+ setups. There's only sometimes that I will add more cons. Now, there's a system that you need to build yourself for position sizing. There should be three or four different sizes that you have that you have, right? Number one, you have your main position size. You see a good setup, it's like a B+, A- to A+ setup. You have a normal position size, right? For me, that's around 4 ES contracts, 4 to 5 ES contracts. So then I have a small size, right? That's normally around 2 ES contracts, 2 to 3 ES contracts for me. And then I have a super small size, which is like 1 ES contract or micros, whatever it is, right? That's just if I'm not confident, but I want to, test my strategy, or let's say I'm up $1,000 on the day and I don't want to risk profit, I'll trade super small size because I want to test price. And then I have a very confident trade where I'll add like an extra contract to my normal position size. So I do sometimes add cons, but not like double. I will not add like double my position sizing. Never, ever, ever. You versus you. Have that shit on a post-it note in front of you. Absolutely. Survive to trade another day. Every mean possible. Exactly. I actually needed to hear that. Most successful people have a plan and routine they follow every single day. The same with trading. Absolutely. Guys, trading is one of those jobs where if you do not have the discipline to come into the market every single day and follow your rules actually, I want to share a story with you guys. I have a buddy. I'm not going to say his name, but I have a buddy who I started trading with for when I first started trading. So around 3.5 years ago, somewhere around there. And we started trading together. He ended up having a lot more success than I did when I first started trading. I remember like 2 years into my trading career. Again, I still not profitable around 2 years in. I'm almost profitable, but I'm getting there. And he just had a $300,000 year. And he's the same age as me. Or he's a year older than me, and he had a $300,000 year. And at this point, I'm still red, right? But we've been trading the amount, the same time. We've been trading the same amount of time. So as it has like this emotional like effect on me, where it's like, I'm just not like cut out for this. Like this kid who's been trading the same amount of time I have, but he just made 300 grand, and I'm still red. I'm still negative. How is that even possible? So a year goes by, and this is very recent. In January this year, he kind of disappeared. Normally he posts stuff on social media. He's a trader in another Discord. He's very active. We used to talk a lot, but then he stopped reaching out, stopped, doing stuff like that. And I was very curious. I was questioning. So I reached out to him and I was like, "Hey brother, I hope you're doing good." And he called me up and said that he wanted to talk to me about something. And he called me up and basically said, he's like, "Justin, I'm going to talk for around 20 minutes and I don't want you to say a single word. And I don't want you to interrupt me. I just want you to listen." He said, "I've been living a lie and I do not want to live this lie any longer." And he basically told me that in January, he blew up. He blew up every single thing he had, every dollar. He had a $400,000 account and he lost 300 grand overnight. You want to know why? Because all it took was one single day where he decided not to follow his rules and he blew up. And he went from being up $300,000 the last year to losing all of it in a single day. Now, he's not a swing trader, but he failed. Now, it doesn't really matter how he lost it. Well, but what happened was he swung. Keep in mind, he was trading like 15 minis. Like 15 minis of NQ, guys. 15 minis of NQ. And he swung it and went to bed. He didn't know that there was CPI in the morning because he wasn't aware of the news. He didn't pay attention. And he woke up down $300,000 and then, yeah. So the moral of the story is if you let the market have an opportunity to fuck you over, it will do so. So don't give it an opportunity to do so. All it takes is one single day for you to come into the market and break your rules for you to wipe out months and months of progress. That is why discipline is so important in the market, guys. So important. Funny how the mind never lets winners run, but okay to let losers run. Yep, exactly. Because we don't want to accept a loss. So when we see, we're very optimistic when we see a loss because we're like, it's going to bounce, it'll come back. I'm drawing in every single fucking thing. I'm like, oh, there's got to be a support. There's a support right there. There's a support right there. There's a demand zone right there. It's going to bounce. You start fucking making shit up. That's not even there because you're hopium. You're on your fucking, you're on hopium right now, hoping that, this trade's going to go back in your favor. But when you're green, when you're actually up on the trade, you want the satisfaction of being right. You don't even care about, being profitable. You just want in this specific moment right now, you want to be green and you want to be right. So you take it off. You're like, fuck yeah. Let me screenshot this and send it to my fucking buddies. And then, next thing you know, you take a loss, you let it run and you pass your stop loss and it wipes out, 3 times that win you just made, right? Have you ever read any books about trading? If you do, give us some examples. I actually have. I don't even want to say I have. I haven't read a full book. No, I've watched Trading in the Zone. I've never read the full book though. Now I highly recommend. I definitely think that there's people that need to read psychological trading books. Now I think psychology is the only thing you should be reading with trading. I don't think you need to be reading, I think a lot of trading books are a scam, to be honest. I don't think you need to be reading to learn. I think learning comes from experience and actually being in front of the market. But psychology-wise, I do think absolutely there's definitely some good books like Trading in the Zone by Mark Douglas that talks about the psychology of trading. I thought I heard you talk about it before, but what are the average size moves in points on ES and NQ? Well, the average points is going to be a lot more because notice that NQ is, 12,000 price. ES is, 3,000 price. But price move tick basis, ES moves $12.50 per tick. Well, it's actually less, to be honest. NQ moves less than $12.50 per tick. I'm pretty sure NQ moves $5 a tick or something like that. I know it's less than ES. But it still moves quicker, right? Keep in mind that even though it's a less size or money size per tick, it still moves in a faster basis relative to, the contract size. That's why I kind of like the idea of trailing drawdown. Despite it being annoying as fuck, it forces you to take profits, trains you for what to do once the eval is passed. Yeah, I agree. Yeah. This is how everything in life is. Trading reveals your habits in real life, good or bad ones. Withdraw, people. Withdraw your profits. Yes. All right, guys. I think that's enough ranting for now. I really did enjoy talking about that, though. I think it is very, very, very important for people to understand, you know, the things that people don't talk about, which is like the nitty gritty, the problems that people have emotionally, like, you know, like actually being in a trade and in the emotion. Like I relate to you guys. I've been through it. That's why I'm here to show you guys how to get through it, because I've been there and I've gotten through it. So I want there, you know, I want to be here to help you guys through those certain things. So, all right. Let's look at what we're looking at going into tomorrow. I just went on a spiel for literally like an hour and 20 minutes. All right. Okay. So going into tomorrow, looking at a 1 hour, I would really, really like to see, really like to see us come back into this breaker block here and then take out buy side liquidity. Looking at this trade on ES, again, liquidity swept internally. Now, since we did take this high, this is earned internal liquidity. So I do want to see us come back to this breaker block. If I look at a 4-hour time frame, we also have a 4-hour fair value gap formed. If I look at a 1 hour, we have this 1 hour fair value gap formed here as well. But I would like to see us come back into this breaker block. I also am going to draw in this 5-minute fair value gap that I have here. So I am bullish going into tomorrow, but I do want to see us come back down here and then bounce to the upside to take out buy side liquidity up here. So that is what I am looking at going into tomorrow. If we don't end up coming back to this breaker block, we'll most likely just go straight to liquidity, buy side liquidity here. And then I'd most likely be a little bit more short biased once we take out buy side liquidity. Looking at a 4-hour time frame, we did have a nice strong bounce from this previous level down here in the 1 hour. Looking at the 1 hour on NQ as well. Again, NQ looks bullish. Notice how we're already bouncing off of the breaker on NQ. Looking at let's see if there's any fair value gap here. Oh, actually, let's draw in our weekly opening gap. I didn't realize it's Sunday. Let's draw in our weekly opening gap for the week. So let me see if I can find where that is. Where did we open? I think we opened here. Friday, Sunday. Yeah, okay. So it's actually very, very small. So we go from Friday closing price. Friday closing price. Wait, did we open at the same price? All right, there we go. Okay. So this will be our gap. This is 4010 to 4008 exactly. 4010, 408 is going to be that gap. So now what I'm going to do is extend this. I'll make it a separate color so we know that this is our weekly opening gap here. I'll make it like pink or something. Okay. Want to watch that again? If this will act as a magnet throughout the week and throughout the coming weeks, knowing, you know, where we're most likely headed towards next. But yeah, that's pretty much it, to be honest. Just going to be watching for this breaker block tomorrow. Now I'm hoping I get some sort of setup in the morning. Again, I'd like to see us come back to this and then form some kind of long setup in the morning to target buy side liquidity. But we'll see what happens in the overnight session. So I hope you guys, how do you know which fair value gap in the 1 hour? So basically what I want to do here, right? So if I'm charting this, I notice we have a 1 hour breaker block, right? We have this breaker block, we pull it over. So now I'm like, okay, let's look for a fair value gap. If we can find a fair value gap in here to maybe dial in where an entry would be. So number one, we have kind of like 1 hour here. So that's the only really thing I see. So now I want to go into a smaller time frame, 30-minute, nothing on a 30-minute, 15-minute. Now we have an old fair value gap here on the 15-minute, right? But that's already been kind of broken through. But that might be something that we could bounce off of. So then I go to a smaller time frame, like a 5-minute. And this is the only thing that hasn't been hit yet. So now I draw this in. And then boom. But I do want to draw in this here as well, because this is a 15-minute, and I do think that we can come back down in here as well too. All right. Do you answer Discord DMs? I do. All right, guys. I hope you guys enjoyed the session. A little bit longer than usual. We're on like almost an hour and a half here. I hope you guys enjoyed the session. I did kind of rant on a lot, but I think it was very, very, very valuable. I think a lot of, certain things that we talked about aren't talked about enough. And I'm definitely going to be posting this session on YouTube, because I do think a lot of people need to hear what we did talk about. And I think it's going to be very beneficial for a lot of people. So if anybody has any questions, feel free, again, always feel free to at me in the Discord, in the VIP chat, whatever it is, message me, and I'll always get back to you. So I hope you guys have a great rest of your night. I will see you all tomorrow morning for the live session. Yeah. So peace out, guys.